These stocks that I'm going to tell you about today have serious growth potential and pay insane dividends. What's going on YouTube today? I'm going to give you my top 5 dividend stocks for 2019. Let's do this. What's going on, guys? My name is Mike and this is Stocks for Dads, where we teach you how to build generational wealth for you and your family. I would like to first apologize for last week. I meant to put this video out then, but I got sick and so I couldn't put it out. But I am better now and I'm doing this for you guys. So first, there are a bunch of different ways to invest in the stock market. You can buy growth stocks, you can buy dividend stocks, you can buy REITs, you can buy ETFs. But one of my favorite ways to invest is buying into stocks that pay really good dividends and have serious growth potential. Dividends can be a vital part to anyone's portfolio. If you're watching this channel, you probably already have an idea of what dividends are. But if you don't, long story short, if you own stocks by what's called an ex-dividend date, the company gives you money per share, basically for owning those shares. Some people build their entire portfolios around dividends and others don't. I personally recommend doing both. There is a benefit to buying growth stocks and there is also a benefit to buying dividend stocks. But these next ones that I'm going to talk about can do both. So today, I'm going to briefly tell you about Iron Mountain, Kinder Morgan, Pattern Energy, Philip Morris, and AT&T. Iron Mountain is one of my favorite stocks to tell new investors about. It is super easy. This company was founded in 1951 and it's all about information management, data storage, and secured shredding. They operate worldwide in over 50 countries and have over 230,000 customers. On the 5-year chart, their stock is plus 46.91% and the price ranges from $25 to $41, and it basically stays in between that range. Not only do you get to play the buy low, sell high game, but you have a super awesome dividend on top of it. For each share that you own of Iron Mountain, you get 61.1 cents per quarter. At the current price of about $35 a share, that means every quarter, if you took $1,000 and invested it in IRM before the ex-dividend date, you get anywhere from $17 to $18 per quarter. That amounts to about $70 or about 7% return a year. Way better than any savings account is going to give you. That 7% that you're getting from the dividends is from the dividends alone. If during the year you play the buy low, sell high game, which is super easy to do with this stock, you also have the potential to gain a lot of money whenever the stock price goes up. Number 2, Kinder Morgan, ticker KMI, was founded in 1997 and is one of the largest energy companies in North America. They engage in operations of pipelines and terminals that transport natural gases, gasoline, crude oil, CO2, coal, and other products. During the oil crisis in 2015 to 2016, the stock price dropped from $45 to $13. To make it even worse, the CEO, even though he was doing the right thing, cut the dividend by about 75%, making a lot of investors super angry. But he ended up doing the right thing, and since then, the stock has been doing quite well. Kinder Morgan ran into a bunch of problems in Canada, and there was a couple of other problems in 2018, but all of that is behind us now, and they're actually doing a lot better. On the 1-year chart, it's actually up 24.9%, with a stock price range of about $15 to $20. In 2019, the stock has done nothing but climb along with the whole entire energy sector. And on top of this, Kinder Morgan intends to increase the dividend all the way out until 2020. The stock price right now is at about $20 and they pay 20 cents a share. However, they have plans to increase it up to 25 cents a share for the next quarter and up to $1.25 per share per year by 2020. So not only do we have potential to get awesome dividends from this stock in the medium term, we also have the potential for this stock to double in the long term. Prior to the oil crisis in 15 and 16, this stock price was at $35, $40 easy. So if the stock price is currently at 20 and it keeps doing the same thing, in the long term, I don't see why we won't be back where we were. Using our $1,000 investment from earlier, if we put all of that money into KMI before our next dividend date, we would get $40 a year, which is still pretty good considering that banks are giving you like 1%. Number 3 is a new one for me. Welcome to Pattern Energy. It was founded in 2009 and it's an independent power company that owns and operates wind and solar power facility sales contracts. It currently does business in the United States, Canada, Chile, and Japan. It has the largest wind power generator in Canada and is currently building the largest wind power plant in North America. This stock in the last year has gone up 21.13%, and it is currently only at about $20 a share. Due to its insanely low price versus its dividend payout, this is actually the highest paid dividend on this entire video. They pay 42.2 cents a share per quarter. So if you took the same $1,000 investment and you invested it into PEGI, you would walk away with about $85 per year and 8.5% up on your investment. That is from dividends alone. This is not even considering how well energy is doing, how well the energy sector is doing. It's not even considering that people are moving towards cleaner energy. It's not even considering where this stock is going to be in 5 to 10 years. This stock has serious growth potential and the dividend is nuts. And if the dividend is as good as it is now at $20, imagine how good it's going to be whenever it starts getting real good. Number 4 is, I guess, ethically controversial. Philip Morris. Philip Morris was founded in 1847 and its current headquarters is in New York, New York. Philip Morris is a cigarette and tobacco company and has products sold in over 180 countries. It is most known for Marlboro, but actually nowadays more people are smoking the IQOS, which is that like semi-e-cigarette. They own that, by the way. Looking at the chart, it is up 8.44% on the 5-year and averages about $83 a share. It's currently about $87 per share, and considering its highest price a few years ago when it was $121, I think that there's plenty of room for growth. If you can get over the ethical part about investing in a company that sells tobacco products, it actually sells a really nice dividend. They pay out $1.14 per share per quarter. So if we took our same $1,000 earlier and we paid $87 per share, we would walk out every year with about $50 in dividends. Last but not least is AT&T. AT&T needs little introduction. But AT&T began as the Southwestern Bell Teleco. It was founded in 1880. It is the world's largest telecommunications company and the second largest provider of mobile services. To make things even better, it's number 9 of the Fortune 500 in 2018 by total revenue. They boast over 273,000 employees. If you are in America, there is a good chance that you are using an AT&T cell phone service or even landline service if we still use those. Although on the 5-year chart we are down 6.26%, the 5-year chart looks super solid. It ranges in stock price between $28 and $43, and it raises its dividend every year. Raising dividends every year is a key point that every investor should look into. You want to see that consistent increase in dividend as the years go by. Even if it's by 1 cent or 2 cents, 5 cents, 5 cents is actually a lot. Even if it's by 1 or 2 cents, you want to see that slow increase in dividend as time goes by. So taking our $1,000 and the current stock price of about $29.80, if we buy AT&T before the ex-dividend date, we walk out with about $70 a year from dividends alone. That's 7%. So the point is, guys, with dividends alone, you can beat inflation and savings account interest rates. In the long term, these stocks also have potential for super growth. Some of them more than others, but there's potential for growth. If you guys are invested in dividends, let me know what you're invested in the comments below. I love to hear about different dividend stocks because some people know better ones than I do. So if you know one that I don't know of, drop it in the comment below and I'll look into it. Lastly, make sure you guys look into each of these stocks yourself. Don't take my word for it. Make sure you do due diligence. Go on there, find the ex-dividend dates, find out what companies you're investing in. Make sure you are doing research in the company that you are putting your hard money into. If you enjoyed this video, do us a favor and hit the like button. And if this is the first time you visited our channel, consider subscribing. I'll see you guys next week. Peace.